Good evening, everyone. आज request everyone to please keep your phone on silent mode and Randir भैया चालू as usual, before we start the meeting, please raise for institute motto along with national anthem. नहीं आ गया मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड़ उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्छल जलधि तरंगा तब शुभ नामे जागे तब शुभ आशीष मांगे गाहे तब जय गाथा जनमत मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 भीम। भारत माता की। Respected members, speakers, guests, and friends, good evening to all. सबसे पहले मैं बधाई देना चाहूंगा हमारे भीष्म पितामह एल.एस. लोढ़ा जी, जिनकी आज शादी की सालगिरह है। भाभी जी को मैंने निमंत्रण दिया था, लेकिन वो नहीं आई। कोई बात नहीं है सर, शादी की सालगिरह की आपको बहुत बहुत बधाई हो, और आप दीर्घायु रहें और आपका आशीर्वाद हमारे सर पर ऐसे ही बना रहे।
एक मिनट कैलाश जी, आपकी शुभकामनाएं मेरे भविष्य के ईश्वर में बहुत काम आने वाली है, इसलिए आपको बहुत बहुत धन्यवाद।
On behalf of JB Nagar Study Circle, I extend a very warm welcome to all of you to today's post-budget analysis meeting. Friends, as the convener, it is truly encouraging to see such an enthusiastic response from our members and guests. Your presence reflects the importance of the union budget and our shared interest in understanding its impact on the economy, society, and our day-to-day lives. दोस्तों, the budget is not just a financial statement. It is a reflection of the government priorities and vision for the nation. Through today's session, our objective is to critically analyze the budget, understand its key provision, and discuss its implication in a simple and meaningful way. JB Nagar Study Circle had always believed in informed discussion, healthy debates, and collective learning. And today's meeting is a continuation of that tradition. We are fortunate to have knowledgeable speakers and active participants who will enrich this discussion. I thank all our members for their continued support and also welcome our guests who have joined us today. And I am confident that today's deliberation will be insightful, thought-provoking, and beneficial to all. Once again, a warm welcome to everyone, क्योंकि दोस्तों, आंकड़ों में छुपी होती है नीति की भाषा। आंकड़ों में छुपी होती है नीति की परिभाषा। हर घोषणा की होती है अपनी एक परिभाषा। आंकड़ों में छुपी होती है नीति की भाषा और हर घोषणा में छुपी होती है अपनी परिभाषा। समझना है हमें बजट का मर्म आज, तभी बनेगी चर्चा सार्थक और खास। In this word, I hand over the mic to our past Central Council member, संजीव जी महेश्वरी।
Thank you, Kailashi. A very hearty good evening to all of you. Distinguished guests on the dais, my esteemed colleagues, dear members of JB Nagar CP Study Circle and friends from the fraternity, what an incredible turnout that we have today. 4 o'clock, we had so many members flowing in and the hall is completely full before the start of the meeting. So for us at JB Nagar CP Study Circle, the Conveners Forum, the budget program is just like a Diwali and Holi program for most of the Indians. It's an occasion for celebration where we venture out not only to bring out the best in terms of knowledge, not only for our members, but also for the society at large. Over the period of years, the media would say that the importance of budget has reduced because government keeps on bringing in reforms across the year. So be it in terms of the labor code or be the IBC or whatever reforms have taken place, they have taken place outside the budget provisions, and possibly there would be a lesser impact of the budget in terms of looking out for the provisions. But as professionals and as the professionals who service the society at large, it becomes imperative for us to understand each and every sentence, each and every word, the full stops and the commas, and then actually guide the members, guide our society at large, guide our clients in terms of how a particular section needs to be interpreted and what needs to be done. And even in this budget, the ninth budget of this finance minister, it was expected that there may not be many changes, but nevertheless, we see that there is a continuous element of a continuity of actions which is being taken by the government in terms of year after year. We find that there has been a record capital expenditure which has been committed of 12 crores, 12.2 crores this year. The fiscal deficit target is also being kept in place. GDP growth projections is also at 10%. So a lot of things which we have been reading as chartered accountants year over year is falling in place. And a lot of new areas which have come across in terms of Biopharma Shakti, India Semiconductor Mission, ISM2, SME growth funds, and there is a whole series of action points which are apart from not only the direct tax provisions that we all strive to look at, but more importantly, what is relevant at the national level, how it is going to impact our macroeconomy and the business community. So a lot of things that we are going to have today. It's the budget speech is maybe for 90 minutes, but I think each one of us has to invest at least 90 hours to understand the nuances of this budget. And that's been a collective endeavor from all of us. And we have some very, very distinguished speakers today who's going to share their insights into this budget. So we are here today not just to understand what was announced, but to decode what it means for our practices, our clients, and our economy. So Budget 2026 emphasizes a compliance-friendly, trust-enhancing tax framework. And over the next 3-4 hours, we have a power-packed agenda. We'll traverse from direct tax intricacies to capital market implications, from TCS rationalization to derivatives transaction, from gift city incentives to the impact of this fresh India-US trade impact that we have outside the budget also. So let's begin this intellectual journey. But before that, let's celebrate some of our achievements. And for that, before we deep dive into the budget, I would like to invite CA Mahesh Bagaria, our past convener of the study circle, to present briefly the study circle's achievement for the year 2025. Maheshji, please come forward.
Thank you, Sanjeev ji and convener. Esteemed Dias and my dear friends, a very good evening to you. As we witness, the budget is a process, comes every year, once in a year. But nowadays, in Modi regime, budget comes every day. The reform express goes on. It should not be stopped. So whatever provisions, whatever announcement, new schemes, new projects, whenever it is needed, it is announced and funds are being arranged. So Reform Express is on and on. We had a live screening on 1st of February and on capital market in the instant reaction, it was told that there will be much volatility in the market, like a roller coaster. Baga sir, you will agree with me. 1.5 years, the things were going up and down a much. Even after the budget was completed, speech was completed, the NSE went down 600 down. 600 points. So there is much volatility, and main factors is moving around Mr. Trump, Trump and Trump. Whether it is morning, he is thinking something, he is thinking for war or capturing some country. Next day, picking up the president, bringing into USA, or tariff war. All economy, and due to that, the stock market moves around the Trump, Trump and Trump. Budget we had seen, it has gone. I think the budget makers were knowing much that they are having the deal after 2 days. That's why much was not visible in the budget. It was a very good budget for the long term. So is the budget which our both opening speakers, निहार भाई एंड अजय बग्गा जी, एज यूजुअल बग्गा जी से तो 1 महीना पहले अपॉइंटमेंट ले लेता हूँ. फॉरेन में रहते हैं, बोलते बस मेरे को मैच डेट लिख के डालो. मुझे नहीं भाई, फिर आगे पीछे हो जाएंगे तो मिलेंगे नहीं. कल ही इनको देख रहा था जीटीवी में, अनिल सिंघवी जी के साथ वार्तालाप कर रहे थे, तो अनिल जी इनकी काफी बड़ाई कर रहे थे. मैं बोला अंकित को, यार ये कैप्चर कर ले जरा, आज यहाँ दिखा दूंगा यहाँ पे. तो अंकित ने बोला यार बैकवर्ड नहीं देख सकते, नहीं तो देखते हैं अनिल सिंघवी जी अजय बग्गा जी की बड़ाई कर रहे थे. तो वी आर फॉर्चुनेट टू हैव सच स्पीकर हियर. So crux of the speaking is that there is a much volatility in the market, be it a equity or commodity market nowadays, gold, silver and copper. Volatility. But here in our JB Nagar CP study circle, there is a strong, full stability. We were born on 14th October 1999. That was the Valentine Day when the JB Nagar CP study circle was formed. And today the 27 years have been passed. And every year the new convener is appointed who is vigorously working to surpass the earlier convener. So this is a very vibrant and biggest study circle. And you, James, are the member of this study circle. So कुछ short highlights for the information of the dais and the members for the year 25-26 till date are: we have been the winner of the Best Study Circle Award and appreciation certificates since 2003-4. It's not 20 years, it's 23 years actually. 49 events in a year up to 31st December 25, including 3 physical meetings every month. 92 absolute CPE hours generated through physical CPE programs. More than 17,800 persons attended the various events of the study circle. 35,000 CPE hours were generated. Recording of session on YouTube for the benefit of the members is there. After the program is over, session is over, it is circulated to all the members along with the PPT of the speaker. For the benefit, it is available on the website also. Anytime afterwards also, any member can look at into. Free annual health checkup camp along with the mega blood donation camp. Drive is in association with the Tata Memorial Hospital and Hotel Kohinoor Continental. Both participated, and more than 400 members participated and taken benefit with the 65 units of bottle. The laptop bags were given to all blood donors by the Choice International Limited. Website was revamped and some of the new feature was added for the benefit of the members. 350,000 plus WhatsApp and 3 lakh plus email were sent to the members. A well-maintained library cum reading room is available for the benefit of the CA students. We distributed the WIRC manual at the very concessional rates. actively participated in the study circle members in the program of WIRC. WIRC is always telling JB Nagar, aa gaya to WIRC program is done. Our members frequently delivered lecture and presentations at various state and national level, international level. Two-day national conference titled Corporate Law Unleashed Strategy for 12 CP hours was held on 4th and 5th September at Kohinoor Continental, which was well attended and supported by the JB Nagar CP Study Circle. Sri Ravindra Sisweji, IPS Joint Commissioner, State Intelligence Department, had visited as a guest of honor in our study circle. We participated in two-day national conference on capital market held on 7th and 8th November 25 with the 12-hour CP hours at Thakur Complex. A discount of 500 was given to our members, those who attended that conference. We participated in two days regional conference where again the 500 discount was offered to our members. Our study circle, as usual, is the highest contributor of rupees 2 lakh rupees towards Chartered Accountant Benevolent Fund to support the fraternity in times of need. We also felicitated the newly qualified chartered accountants of our families. They also became the member of our study circle. JB Nagar CP Study Circle of WIRC of ISI proudly presented a special custom chat GPT within few minutes of the presentation of the Union Budget. During 25-26, our Women Cricket Club had a significant milestone, thereby winning the first prize in the WIRC. That is our pride, friends. List is very long, but I will cut short because we have come to hear the eminent speaker, Nihar Bhai and Ajay Bagaji. Thank you very much. Sanjeev ji.
Thank you, Maheshi, for giving a complete backdrop of the activities of the study circle. Friends, we have many dignitaries and guests that are here, and we are very fortunate to have them with us today. We would like to recognize their presence and felicitate them. The first is our very own Central Council member, CA Vishnu Agarwalji. May I request Manish Gadiaji and convener to please welcome and felicitate him. आगे आइए।
नीचे से भी दो।
May I request Haridas and Mahavirji to please join in. Next, we have WIRC's Vice Chairman, Mr. Piyush Chandak. Please come forward. Please, they will welcome you, please. May I request Rakesh Gupta and Anilji to please come forward. We would like to welcome the presence of Rajkumar Adukia ji, our past Central Council member, with a floral bouquet, please.
Flower.
May I request Chintan, please to join in. And we also have the presence of Ram Bihari Pujari ji, who has traveled to Mumbai. Dr. Ram.
Dr. Ram. 2 minutes holding.
First 2 minutes. Kishan. So now I would request Central Council member Mr. Vishnu Agarwal ji to please give his blessings to the study circle.
Very good evening, respected our past president and today speaker on the budget analysis, Nihar Jambusaria ji, our past Central Council member and the founder of this JB Nagar Study Circle, C. Sanjeev Maheshwari ji, our another Central Council member, past Central Council member Rajkumar Adukia ji, the convener of the JB Nagar Study Circle, Kailash Katurka ji, and all my esteemed colleagues, Speaker Ajay Bagga ji on the capital market. Friends, today Kailash Katurka ji has invited me not as a Central Council member, but we have studied together in the Diwan Kuldeep Singh CA student hostel, and we have cleared our CA both in the November 2002 exam. So he has not called me as a Central Council member, but he always call me कि विष्णु आपको तो आना ही है. But when he called me, so I just told to Kailash, this is the study circle meeting today, Union budget. So everyone will come on the here to our Nihar Bhai and Ajay Baggaji. But when I came 4 o'clock, friends, believe me, everyone with the hall was house packed, and everyone we here to hear Nihar Jambusaria ji. So I will not take much of the time. Only 2 minutes I highlights in the direct tax committee, since I am the vice chairman of the direct tax committee. So what we are doing, friends, when the new income tax bill 2025 was introduced in the Lok Sabha Parliament, immediately the select committee has been formed, and immediately they have called the first described the on the finance bill 2025. They have invited Institute of Chartered Accountant of India before the select committee. President has given me this responsibility to present before the select committee. Friends, immediately we have also formed 10 groups across the country and invited the suggestion from our members. Friends, 32 member of the parliament in the select committee, and they call us for the 45 minutes to hear our view. They have given 2 hours 30 minutes before the lunch session. Whole session has given to the Institute of the Chartered Accountant of India, and when this bill has become the act, first I was worried about the section 288, because all our sister institute is also approaching to the select committee to introduce their names in the definition of the accountant. Friends, but they have heard the ICI, and they said that it is the only domain of the chartered accountant, they can do the tax audit. Friends, immediately when this Income Tax Act 2025 came, we have done so many programs across the country, and we have also joined hand with the Income Tax Department and the CBDT, and along with the CBDT, first time we have done on one side the income tax logo and other side our ICI logo. We have done so many programs across the country. At the same time, each of the doing business, again we have joined hand with the Government of India, Niti Aayog, and so many where, and we have done so many programs with the jointly held with the Government of India. Friends, we have came out with so many publications from the income under the direct tax committee. Firstly, we have came out the first time Income Tax Act 2025 with the price of rupees 500, including the courier charges, because we have thought that all the publication house is selling in 2000 and 2500 rupees, and our 5 lakh members is purchasing this income tax act through various the publication house. So good responses came from the so many our members. Again, we are printing in the 500 rupees only the income tax act 2026. So I request our convener Kailash to just you order whatever book you want to distribute amongst our members of the JB Nagar Study Circle members in the advance, so that my each and every member will be benefiting. Friends, I will not take much of the time, but under the leadership of the Kailash Katurka ji and Sanjay Maheshwari ji, this study circle is doing very good work. Very good program he has done in this particular year. Not I am not appraising as my friend, but as a leader of the profession, as a leader of the JB Nagar Study Circle, he has done very good program for our members fraternity, and he has done so many program for activity program for our benefit of the members. Friends, once again I thank you Kailash Katurga ji for inviting me and sharing my views. Thank you friends.
Thank you. Thank you, Vishnu. Thank you very much for your kind words. I would now request the WRC Vice Chairman, please to quickly share his thoughts.
Thank you very much, sir, for the opportunity. First of all, a warm good evening to all the members. Dignitaries on the dais. I'll not be taking any much of the time. The important thing which I want to share is in the budget we have seen the budget having expenditure of 57 lakh crore rupees and income of around 35 lakhs crore rupees, and the deficit which is majorly attributing to only the interest payment which our government is paying for the loans taken earlier. And this budget is presented by a woman for the 9th consecutive year. So we should be applauding all the women in the present in the house as well, because whenever we find that अपने घर की लक्ष्मी के हाथ में जब अपना सब होता है हिसाब किताब, तब ये बात आती है कि हमको सिर्फ इंटरेस्ट कॉस्ट वाला ही डेफिसिट है, बाकी तो जितना कमा रहे उतना हम एग्जैक्टली खर्चा कर रहे हैं, इंक्लूडिंग द कैपिटल एक्सपेंडिचर ऑफ 12 लाख करोड़ रुपीस. तो दैट इज हाउ लक्ष्मी अपने घर को संभालती है और अपने देश को भी संभालती है. And with this, I thank for this opportunity and take this opportunity again to congratulate JB Nagar Study Circle for the entire year activities I have witnessed. The active study circle in our WRC, and with this, heartiest congratulations to you as well. Thank you very much.
Thank you very much. Thank you very much. Wishing you all the best. May I request Pujari ji to please come forward and say a few words.
जय श्री बालाजी. मैं राम बिहारी पुजारी सालासर बालाजी नाम से, जो राजस्थान में स्थित है, वहाँ का रहने वाला हूँ. आज आप लोगों के मध्यम आने का मुझे सौभाग्य प्राप्त हुआ. अतः मंच पर विराजमान समस्त महान भावों का हृदय से अभिनंदन करता हूँ एवं समस्त उपस्थित सदस्यों का स्वागत करता हूँ. एक बार पुनः आपके समक्ष आने का सौभाग्य अवसर मुझे प्राप्त हुआ है, उसका मैं तहे दिल से आभार व्यक्त करता हूँ. बजट के इस नवीन सत्र में आप लोगों के मध्यम आकर में गौरव महसूस कर रहा हूँ. सरकार का कार्य बजट को हमारे मध्यम लाना, लेकिन मेरा ऐसा मानना है कि उस अर्थव्यवस्था को सुचारू रूप से चलाना और उसे सही दिशा प्रदान करना, यह कार्य आप समस्त लोगों का ही है. क्योंकि अर्थव्यवस्था को उच्च स्तर पर पहुंचाने का कार्य आप लोगों के अलावा किसी के द्वारा असंभव है। ये कार्य आप लोग ही कर सकते हैं। जैसे हमारे बुद्धि के ज्ञाता श्री हनुमान जी महाराज, जिन्होंने विद्यावान गुणी अति चातुर राम काज कीजिए अति आतुर, भगवान राम का जो कार्य श्री हनुमान जी महाराज ने बड़ी ही बुद्धिता से, ज्ञान से जो कार्य किया, उसी प्रकार आप लोग जो है एक भगवान के समान आप ये जो कार्य कर रहे हैं, ये बड़ा ही सुंदर, और हम लोगों के लिए, व्यापारियों के लिए जो दिशा निर्देश आप लोग करते हैं, वो बड़ा ही श्रेष्ठ कार्य है। इसके लिए मैं भगवान से सदैव ये प्रार्थना करता हूँ, करता रहूंगा कि आप तरक्की करें, स्वस्थ रहे, मस्त रहे, माँ लक्ष्मी और आपके मुख में विराजमान सरस्वती का आशीर्वाद सदैव आप लोगों पे बना रहे। जय श्री बालाजी की।
Thank you very much for the and for your esteemed presence in our program. Friends, every year, whilst we hold this program in terms of the union budget, we also come up with a budget publication made by our own members. And this budget publication actually gives a lot of clarity on the nuances of the budget provisions. And this exercise is carried out, on a continuous basis, year after year, by the team, dedicated team, who ensures that whatever be the timeline between the budget and the program that we are holding, but the budget publication is well and truly valuable instrument which they are able to provide in time. So we would like to release the same, and I would request all the dignitaries on the dais to please come forward. And the contributors of the budget book, CA Jay Shah, Haridas Bhatt, Mahavir Jain, Chintan Shah, please come forward. And please come forward. All the dignitaries on the dais, please come forward for the release of the booklet.
सर किधर है? किधर है? अरे सर वो बजट बजट बुक जो है ये भी है। अच्छा। वो बुक के लिए है। और
request everyone who has compiled the book, please come on the stage. If
अरे बुक दे दो ये देखिए।
हरि भाई, महावीर जी, अंके जैन जी, जयेश ठक्कर जी, ललित जी, उमेश मारवाड़ी जी, राहुल जी, मनीष गाड़िया जी, चिंतन शाह जी, पिंकी केडिया, विजेता जायसवाल जी, कृष्ण कुमार, अंकित बगेरिया, सीए जयेश शाह, सीए महेश जी बगेरिया, सीए दिनेश शाह, सीए हर्षल अजमेरा जी, all are requested to please come on the dais. And all the compilers are requested to again come on the stage. Yes.
हम लोग तो बैठेंगे सर, आप बैठे
Request all the compilers to come on the stage, please. अभी आप लोगों को देना भी है सर, आप लोगों ने इतनी मेहनत करी है। नहीं नवनाथ आदि
कैला जी बाद में करना सर, कैला जी बाद में करो ना, अभी स्पीकर में गिफ्ट सर दे दे है ना, 2 प्लेट दे दीजिए सर।
Please request all the compilers of the book. Please come on the stage.
करने की बुक कंपाइल की। हाँ और निहार जी इंडिया के बीच में आओ, अरे आओ हाँ लीडर, हाँ चलो चलो जल्दी कीजिए।
Well, friends, let's move to the next thing, which is most important, is the direct tax session. We have with us CA Nihar Jambusaria, past president and member of the Western India Regional Council from Western region itself. And as we have been discussing that though always the thought process was that the Income Tax Act 2025 has already been pronounced, so possibly there may not be many changes. But nevertheless, when we look at the budget, then you see that there are so many changes in terms of staggered ITR deadlines, revised returns, extensions, foreign asset disclosures, reduced TCS, foreign travel, and whatnot. So we have with us CA Nihar Jambusaria, who will be dealing with this subject. And before I request Manish Gadia to please come forward and introduce Nihar Bhai, and also the convener to say a few words about Nihar Bhai.
Friends, it's give me immense pleasure to extend a warm and respectful welcome to our esteemed speaker, CA Nihar Jambusaria sir, a highly respected professional known for his deep knowledge, clear analysis, and practical approach to taxation. Sir, we are grateful to you for your sparing your valuable time and agreeing to guide us through the nonsense of the direct tax provision of the budget 2026. क्योंकि दोस्तों, कानून की धार जब कलम से उतरती है तब समझ की एक नई रोशनी बिखरती है। जो जटिल प्रावधानों को भी सरल बनाए, वही विद्वान आज हमारा मार्गदर्शन निभाए। आज बजट की पंक्तियां बोलेगी साफ साफ, जब अनुभव उनका करेगा सही अनुवाद। नाउ आई रिक्वेस्ट आवर पास्ट कन्वेनर Manish Ji Gadia to give a brief introduction of our speaker.
Thank you, Sunil ji and convener sir. So we all know Nihar bhai. आवाज नहीं है. So Nihar bhai is a chartered accountant since last 42 years. He was senior vice president in topmost company of India, that is Reliance Industries, from 2011 to 2020. And he was president of ICI in the year 21-22. And I always call him as my president because the year in which I was chairman of WIRC, he was president. And under his guidance, I learned a lot of things on the institute ground. Before that, he was vice president of ICI. He was central council member. He was on the board of CAG, IFAC. And the list is very long. He served as a member of SAFA also. So if I continue, the list is very long because he has given a lot of his time to on this. But I can say that as a chartered accountant, what you can do, everything he has done. He started his career into practice. He was principal of a college, so in the teaching, then into industry, then on the institute side. So with this few words, I request all of you to welcome him with loud applause.
Good evening, everybody. The convener of this study circle, CA Kailas, past council member, CA Sanjeev Maheshwari, and my colleague for many years in the regional council and council, Mr. Ajay Bagga, Mr. Mahesh Bagaria, past chairman of Western India Regional Council, CA Manish Gadia, Deputy Convener, CA Lalit Bansal, Dr. Pujari, past Central Council member, CA Dr. Rajkumar Adukia, all the past conveners of JB Nagar Study Circle and friends. When it is an invitation to come and speak at JB Nagar Study Circle, it is always an opportunity. The members is an elite class. The study circle has maintained its track record of being the best study circle always. And I would feel that discussing a topic or sharing a views on a topic which is of professional relevance is an opportunity. So again, this annual budget is something which for so many years with great interest we study, we attend many sessions and try to gather as many views as possible. Because ultimately we have to guide the clients and be guided ourselves with as many views as possible on the amendments which come in. The budget has many aspects, income, expenditure, so many schemes being planned by the government. But my role is to focus and discuss direct tax provisions in the finance bill. Now, again, as you look at the finance bill, one may get a feeling that although the Income Tax Act 2025 has just been introduced and passed, still so many clauses, about 127 clauses. So at first sight, I felt that in 2 days it may be difficult to prepare. But when we started looking at the clauses, some of them are just calibrations, like some mistakes which were left out. They are being corrected through the finance bill. Some new provisions, some new thoughts. Now again, as we discuss, the feeling that we have for so many years that government changes its mind on taxing different incomes in different ways very frequently. Although it was suggested, and when 2025 Act was passed, the finance minister and the government said that this will be amended sparingly and rarely. But in just 1 year, so many amendments have come in. We take it as if this is one time, because when it was done for the first time, maybe they did not have adequate time and they had to correct certain provisions which were not properly placed. So from next year onwards, if there is more stability, it would be a happy situation for all of us. Now with this, those provisions which are just the same or where there are just corrections, we will not discuss in detail because I am told that there is about 60 minutes time in which I need to discuss the major provisions of the finance bill, and there would be some questions also. So the rates of tax, I don't think we need to discuss. Only I have put it here as a revision exercise, that it is just the same under the old regime and under the new regime. There is no change in the rates of tax. Then surcharge, again it is just the same, except that one very significant point which we need to notice, that under the Income Tax Act 1961 up to last year, the maximum surcharge above 5 crores of income was 37%, whereas now under the new act, this surcharge is capped at 25%. So from 2 crores onwards of income, surcharge will not exceed 25%. Again, some of the incomes on which surcharge is kept at lower percentages dividend income, long-term capital gain, short-term capital gain. Surcharge on these categories of income, that is the tax on these categories of income, will bear surcharge of just 15%. Again, coming to MAT provisions and rates of taxes for domestic companies, the rates are just the same. For the sake of repetition, it has been put here. The only point of change is that under the new act, again, the option to be covered by the old regime is open, and in that case, MAT provisions will apply. The rate of MAT from 15% has been reduced to 14%, and the MAT credit for the period up to 31st March 26, that is up to assessment year 26-27, will be allowed to be carried forward with the condition that every year this set off, if you are paying tax at the normal rate from the tax year 26-27, the company can set off this brought forward MAT credit to the extent of 25% of the tax for that year. The balance MAT credit will have to be carried forward, and it will be available for set off up to a maximum of 15 years from the year in which the MAT credit was generated. I think this is a fair provision. The old legacy continues, grandfathering has been done, and this can be set off even under the Income Tax Act 2025 by the companies which continue to pay tax at the normal rates. So these are the changes in the MAT provisions. Now coming to an important amendment where some discussion is required, and we can discuss whether some kind of tax planning in spite of GAR is possible or not. You know that up to assessment year 26-27, the income on buyback of shares was taxable as dividend income. And it was computed by the formula which was given. Formula was very simple, that whatever a shareholder receives on buyback of shares, the entire amount was treated as dividend. And the cost of the shares is to be allowed as short-term capital loss or long-term capital loss, depending upon how long the shares were held. And particularly if it is long-term capital loss, you know the ring fencing, that it can't be set off against any income other than long-term capital gain. So in most of the cases, the taxpayers used to carry forward that loss. And it has happened in some cases that this loss lapsed by limitation and could not be set off against any income. So the shareholder paid tax on the entire dividend, entire receipt on buyback of shares. Whereas earlier, buyback of shares was taxable as capital gain. Now again, the government has come up with, as we discussed in the beginning, a cycle which may sometimes look like a vicious cycle. Today, provision has been amended. Tomorrow, again, the old provision is brought in with some changes also. And again, we do not know how long these provisions will continue. So now what is proposed is that the on buyback of shares, income from buyback will be computed under the head capital gain. The shareholder will get deduction for the cost of the shares, long-term or short-term, depending upon the period of holding. The gain will be computed, it will be taxable. The definition of dividend has been amended. I am not going into section number because this time, for the first time, I felt as if more than mental exercise, I was doing physical exercise. Because on the one hand, 1961 Act, on the other hand, 2025 Act, and on the third hand, Finance Bill, on the fourth, the explanatory memorandum. So the old case laws, you have to go to a different table, open on another laptop and try to connect. So it was a physical exercise along with mental exercise this time. So if you look at these provisions now, on buyback of shares, the treatment is different for those who are the promoters of the company. Now here two questions arise. That if the shares are listed, who is a promoter? Then I think the definition is available. It is given by SEBI, it is very clear. But if the shares are unlisted, I think it is a controversy, and many times it may lead to arguments if the case is selected for scrutiny, whether a person is promoter or not promoter. So one will have to look at the facts of the case and try to fit a case within or outside the purview of promoter, and then compute the capital gain and the tax liability accordingly. Now again, as I mentioned, although GAR is there, GAR has a threshold limit. Now suppose a promoter holds shares and on buyback, he doesn't cross the threshold. Is it possible that before the buyback is implemented by the company, these shares are transferred to a related person or even an unrelated person at the fair market value, or maybe at the buyback price itself? And then when the buyback happens, although the promoter will pay tax at higher rate, that is, if it is a domestic company, 12.5 plus 9.5. If it is long-term capital gain, if it is short-term, again 20 plus 2. And you can see the rates which are listed there. So this additional tax, how it can be avoided? If suppose it is sold to a close relative before the buyback happens, and then on buyback, even if the relative is a promoter, the cost of that relative is at par with the buyback value, there won't be any capital gain at all. So that kind of planning is still available, but subject to GAR. If the threshold is crossed, perhaps nothing will work, because then it will straight jacket fall into the GAR provisions. So one may think about it. This is the scope available. Now again, if the promoter is a company other than domestic company, the rates are slightly different. The rate of tax is the same, but the additional tax is at a higher rate of 17.5% and 10%. Now this list is here, but again, there is one more point left, that generally in the hands of promoter, they are subject to surcharge also. And surcharge applies on all categories of taxes. But if you look at the list, because we always look at the rates of tax list in the finance bill, this time the additional tax of 9.5%, 2%, 17.5%, 10%. These all are listed in section 69. And section 69 in the surcharge list is not included. Now, whether before this bill is passed, if they make the correction, then there is no scope. But if they do not make the correction, at least for next year, till the time it comes to their notice, surcharge can be avoided on the additional tax. So, although it looks like simple as switchover from dividend to capital gain, there are some tricky points on which one may try to plan. and see that the tax liability is kept at the minimum possible. So these are some of the possibilities which one may evaluate and evaluate the situation person-wise, promoters, position, crossing of threshold, the relations between the parties, and all this. Then there are some amendments which are corrections. As I mentioned, out of 127, you can see some corrections in the 1961 Act provisions also, about 27 or 24. And there are many other corrections even in the 2025 Act. Now let us look at what was left in charitable trust provisions. Now we will have to remember the new terminology. We always refer to these non-profit organizations as charitable trusts. But now in the new act, the terminology is NPO, non-profit organization. In the old act, there was a provision for merger of two charitable trusts. If one is unviable and wants to merge with another one to avoid the accretion tax, you all know that if a charitable trust exists, it is liable to tax at normal rate. But if it exits, then it is liable for accretion tax, which could be very heavy at times. On the net assets, the trust has to pay accretion tax. Now, to avoid this, one concession was granted under the old act. Under section 12 AC, provision for merger was made that if a trust which does not want to exist and wants to exit its activities, instead of simply closing down, it can merge with an existing charitable trust. But in the new Act 2025, there was no such provision. And therefore, some concerns were raised even at that time that you must provide for merger of trusts. This tax is too heavy, and if the activities continue with the assets of the exiting trusts, what is the problem? So I think they have heard the voice, and new section 354A is sought to be introduced to provide for merger of two NPOs. Coming to the next amendment, which again is a calibration or correction. Under the existing provisions, under the old Act, under section 12AB, if a charitable trust is engaged in providing the services of general public utility, then it cannot carry on business. If it carries on business, it has to maintain separate books of account. And the income from commercial activities should not exceed 20% of total income. But if it exceeds, there was consequence of paying higher rate of tax. And this was not considered as specified violation under the old Act. So the consequences of cancellation of registration were not there under the old Act. When 2025 Act was introduced, the new section 351 did not take care of this. In fact, if a charitable trust engaged in general public utility carries on commercial activities, then under the new Act, it is considered as specified violation. If it is specified violation, its registration can be cancelled. So now it is being provided that it is being taken out of the specified violation. Higher rate of tax may apply if the income from commercial activity exceeds 20% of gross receipts, but the trust will not lose registration anymore. So they have amended section 351 and taken out this violation from the list of specified violations. This is a good step again because it was required If registration is cancelled, the consequences would have been dire. The next is a NPO was not allowed to file a belated return. So if a NPO missed under the new Act to file the return by the due date specified in section 263, then it could not have filed belated return after that. Now the section 349 is being amended to provide that NPO can file even belated return. So these three corrections were very much needed. The provisions were already there in the old Act. They were not there in the 2025 Act. They were much required and they have been done now. Income from house property. Now section 21 subsection 5 of the 2025 Act is proposed to be corrected. It provided originally that annual value of a property which is held as stock in trade is to be taken as nil for 2 years. Whereas now the word for is being replaced by up to. So if the property is sold within 2 years, a stock in trade is supposed to be sold fast and faster than 2 years. But still time up to 2 years is allowed. Up to 2 years, particularly if it is immovable property, because annual value of a property, it is of building. So if it can't be sold very fast like a normal stock in trade, time limit up to 2 years is provided. So the word for is replaced by up to, which is again a correction. In section 22, it is proposed that aggregate deduction of interest on borrowed capital shall be inclusive of prior period interest. Now let me tell you what it means. We know that under section 22, interest on borrowed capital is capped at 2 lakhs. It is allowed up to 2 lakhs. But if there is interest for prior period, interest is payable for the period prior to the completion of construction of the property, then that prior period interest on the borrowed money is allowable over a period of 5 years, commencing from the assessment year following, now tax year following the year of completion of construction, over 5 years. And the section is drafted in such a way that interest to be allowed up to 2 lakhs is only for this restriction is only for the interest for the current year. The past interest, which is allowed over 5 years, it is allowed over and above 2 lakhs of rupees. Now, this was not the intention, so they are correcting it that the total interest which is allowable as deduction for the current year as well as the brought forward interest of preceding year, the total of the two will be kept at 2 lakhs and it will not be allowed over 2 lakhs of rupees. Now, in income from house property, if you have noticed, and if particularly Income Tax Act 2025 was discussed in detail in the past, somebody would have pointed out that in income from house property, now there is a provision under the new Act that if a person holds lease of the property for a period exceeding 12 years, then he will be deemed to be the owner of the property. And if he is deemed to be the owner of the property, then interest that he pays or the rent that he pays will not be allowable as deduction. See, if I own my house and let it out to somebody, I receive interest, but I don't pay it to anybody. But if I have acquired any property on lease for say 15 years, more than 12 years, then I am supposed to pay lease rent to the owner of the property, and I receive as sublessor rent from the sublessee. So the rent that I pay to the owner should be allowed as deduction. It is allowed if my lease period is up to 12 years, because then I am not deemed to be the owner of the property. But under the new act, there is specific provision. You will be deemed to be the owner, and there is no provision that rent that you pay once you are deemed to be owner, it shows that the income will be computed as the owner of the property. So it was suggested to the government, to the ministry, that you make the correction, because actually the owner, the lessor pays rent to the owner. So that rent should be allowed as deduction. So this will always remain a question mark. We may claim it and try, but if the officer observes it, he may raise objection and say that you are deemed owner, and therefore the rent that you pay will not be allowable as deduction. So this lacuna still remains, and we need to keep pointing out to them that this requires correction. Coming to income from business, there is one rather amendment or provision. We know that under the old act, employees' contribution, that is, suppose I pay salary of 1 lakh and deduct 15,000 as provident fund contribution or any welfare fund contribution. This deduction, this amount that I have deducted, I need to pay by the due date under the relevant provident fund law or the welfare law. If I pay it after the due date, it is not allowable at all under the old act. The same provision was there under the new act. Now what they are providing is that if this amount which is deducted from the salary of the employee's contribution, if it is paid by the due date for filing return, it will be allowed. Now see the distinction. On employer's contribution to provident fund, it can be paid by the due date for filing return and it is allowable. If it is paid after the due date for filing return, it is allowable in the tax year in which it is paid. But employee's contribution, as per the earlier provision, it was allowable only if it is paid by the due date under the relevant, say, provident fund law, otherwise not allowable. Now it is allowable. The period allowed is longer. It can be paid by the due date for filing the return. But suppose it is not paid by the due date for filing return, it will never be allowed. So that embargo still exists. It is not put at par with employer's contribution, and one need to remember and see that this amount is paid by the due date for filing the return of income. Otherwise, it will lose deduction forever. The next amendment, or rather the introduction, is in section 11, like section 10 in the old act, we have section 11 in the new act, supported by schedule 3. All exemptions are listed in schedule 3 to the Income Tax Act 2025. Now, those of you who have experienced, if your clients had some property, land or building, and it was compulsorily acquired by the government, then under RFCT LARRA, that is right to fair compensation and transparency in land acquisition, rehabilitation, resettlement act, there is section 96, which provides for exemption of capital gain. So if government has compulsorily acquired your land or building or both, you can claim exemption of capital gain under section 96 or of RFCT LARRA, right to fair compensation act, but not under the Income Tax Act. So to align this, now they have made a provision by introducing a new clause in Schedule 3 to Section 11 that this compensation will be exempt even under the Income Tax Act. Now, here there is one benefit. If you read this clause there, it is unconditional. Whereas under Right to Fair Compensation Act in Section 96, there is a rider that if any land or building is compulsorily acquired by the government, but not by entities listed in the fourth schedule to the Right to Fair Compensation Act, then only the capital gain will be exempt. So some of the entities which are listed in fourth schedule, there was a doubt whether exemption will be available. Subsequently, the government issued notification that if it is compulsorily acquired by NHAI or certain authorities, exemption will be allowed. But not all entities listed in fourth schedule are covered. Now, with this insertion, which is unconditional in Schedule 3, compulsory acquisition by any government authority, department of the government, it will all be covered by exemption. So take an example, this bullet train project is going on. At number of places they have acquired land from the existing owners. So they all are eligible for exemption under this schedule now. Then again, this is extension of exemption to income. IFSCs, International Financial Service Centers, and offshore banking units. To encourage them, there was a provision under the old Act in Section 80LA and under the new Act in Section 147 to allow exemption of certain income of a unit in IFSC or to the offshore banking unit for 10 years. For IFSC, for 10 years, 10 consecutive years in 15 years' time. And for OBUs, for 10 years, 10 consecutive years. Now, this period is being extended to 20 years for IFSC, 20 years in a period of 25 years. And for OBUs, 20 consecutive years. So this is extension of the period of exemption. Again, a good step. At the same time, again, this amendment clarifies that after 20 years period, when the income of unit of IFSC will be taxed, it will be taxed only at 15% at concessional rate. So again, this is a good incentive to encourage IFSC and OBUs, particularly the manner in which gift city is being promoted. SEZs are being promoted and exemptions are being given for 10 and 20 years. It will certainly boost investment from foreign countries in these areas and boost the GDP. Now, coming to the next one, again, it is for ease of doing. The only point is, see, in all these provisions, what they provide is, starting with the first one, electronic procedure for lower deduction certificate. At present, we apply for lower deduction certificate and then we have to follow up with the office. And you know, the follow-up involves what kind of exercise. Now they are saying that it is proposed to enable electronic filing, electronic verification, and issuance of lower rate or no rate deduction certificate to ease compliance burden of small taxpayers. Now it is, if this is done in letter and spirit, it is good. We have witnessed some refunds coming in 1 or 2 days after filing of return. Some are still lingering, but many of them are coming in. I will give you example of one small experience that I have. I have TDS for assessment year 2009-10 and credit for this TDS was not given at that time. Today, everything is electronic. Every alternate year, I am receiving a notice that your dues are outstanding for assessment year 9-10. Every time on the CPC, I reply religiously attaching the screenshot of form number 26S for assessment year 9-10, where this TDS is reflected, and tell them that you are going on adding interest. You know, the TDS is 9 lakhs and today they are showing tax liability of 24 lakhs. So I tell them that this way I will become defaulter. You do something, this credit you have to give. And if it is automatic, see, in many cases they have given automatic. But I don't know in my cases what has happened. Similar experience I have seen with many taxpayers that in 26 years the TDS appears, credit is not given, and in the subsequent years, if you have refund, they go on adjusting this refund against that tax liability, never give it to you. So if this experience continues, even for electronic filing of lower deduction certificate, that somewhere in CPC it is stuck, and you go on dialing on the landline numbers that are given, help desk, and if there is no reply, then it may not help. But if it works in letter and spirit, it is a good initiative that government is taking. Then no 10 for TDS compliance in case of purchase of immovable property from a non-resident. So at present, we have a provision that if you buy property from a resident and you have to deduct tax on those payments and pay it, if you do not have 10, you can still make payment if the property is purchased from resident. So it was required that similar provision is made for payment made to non-resident, because generally the person who buys, it is not necessary that he is a tax deductor, because generally properties are bought in individual names, they don't have 10, and the cumbersome exercise of obtaining 10 for a limited tax payment is required to be avoided. So now they are providing, even if you buy it from non-resident, you can pay TDS without having 10 or applying for 10. TDS on supply of manpower. This is a good clarity that now they are saying that if you make payment for supply of manpower, it will be treated as payment for work done. So it will be liable for 1% TDS if it is payable to individual or HUF, and 2% in case of others, if it is payable by individual or HUF. And if it is in others case, it will be 2%. So the dispute whether 5% or 10% will apply will not remain. There is a specific clarification. Then another provision, no TDS on interest income of cooperative society engaged in banking. So at present, if you make payment of interest to bank, no TDS is required. Now, if you make payment of interest to a cooperative society, which is engaged in banking, then also TDS is not required. And I think even if payment of interest is made to a NBFC, this kind of exemptions would be given, because you know the cumbersome process. If you make interest payment to NBFC, then their EMI are fixed. You can't deduct at all. Then you have to write to them that you return TDS to me, I will pay it to government and give you proof of payment. So it is very cumbersome. It was required even for NBFCs. Let us keep representing. Let us see when they realize and make the amendment. But at present, this amendment has been made. Then enabling filing of declaration for no deduction to a depository. At present, SSC is required to file separate declarations, 15GH, whatever is applicable, for non-deduction of tax for each of the payer for dividend, interest, and mutual fund income. Now, if the taxpayer, if the recipient gives only one such certificate to the depository, it will be enough. So this will be good for investor, that for dividend, interest and mutual fund income, no separate declarations will be required. Give one declaration to depository mentioning all the receipts, and depository will distribute it to the respective deductors. So all these provisions are for ease of doing, and I think it will certainly ease the processes. Again, coming to TCS, it is a good development that they have now made TCS rates uniform. So disputes regarding whether it is 1%, 5% or 20% will not be there in the future. In two cases, the TCS rate is increased. In other cases, it has been reduced. So sale of alcoholic liquor for human consumption, the current rate is 1%. It is proposed to be increased to 2%. Sale of tendu leaves, current rate is 5%. It is proposed to be reduced to 2%. And remittance under LRS scheme, general, it is not there. Remittance under LRS for education. See, if remittance under LRS is done for education loan obtained, there is no TCS. But if it is any other LRS above 10 lakhs, it is 5%. Now it will be 2% from April 26. And purchase of overseas tour program up to 10 lakhs, it was 5%. Above 10 lakhs, it was 20%. Now, whether it is above 10 lakhs or below 10 lakhs, it will be just 2% TCS. So this is good. Actually, the intention of introducing TCS at that time was to just see that the income is accounted for. And that is why TCS was introduced. And then the greed continued and 1% became 2, 2 became 5, and it went up to 20%. It is good that they have realized that it should be only for the purpose of just booking the income and making it come to the knowledge of the tax officer. Otherwise, it is not required.
Apply for gift to family member abroad, the TCS.
Yeah, TCS is there. It will continue. 2% now. Now, these three incomes, two in this slide and one in the next slide. Here, there is lack of clarity, and I will explain how there is lack of clarity because they are yet to introduce this scheme. There is an announcement in the budget speech. There is a mention in explanatory memorandum, but there is no specific scheme already announced. So they are yet to announce it. Now look at the first one. This exemption is sought to be provided to a foreign company. See the second column. Foreign company who is providing capital goods, equipment or tooling to the contract manufacturer for use of electronic manufacturing in India. Now, they want foreign investors to invest in electronics in India. And they want foreign companies to invest, but through whom? Through the contract manufacturer. Now, whatever contract manufacturer will pay to the foreign company, it will go to the foreign company in its country. There is no PE here. And this payment, if this exemption is not given, whether it will be taxable. According to me, it may not be taxable at all. So what kind of exemption is sought to be given? We will understand only when the scheme is announced. Till that time, we will not know how they perceive that there will be taxable income in the hands of foreign company. And exemption is sought to be given to whom? Foreign company sitting in its country. If it provides this equipment to a contract manufacturer who is a resident of India, how is that payment received by foreign company taxable here? It would not be. So what apparently looks like is that probably the foreign company may set up a subsidiary here, and through this subsidiary it may receive payment for supply of these capital equipments, and then it will fall under transfer pricing provisions. And under that, if anything becomes taxable, probably this exemption is sought to be given. So till the time the entire scheme comes, this provision will not become very clear to us. Now see, the conditions that they prescribe is ownership of such capital goods, equipment, tooling remains with the foreign company. So what foreign company will receive is lease rent. Such capital goods, equipment or tooling is under the control of the contract manufacturer in India. It is under the control of Indian resident. The contract manufacturer is located in custom bonded area, understandable. The contract manufacturer produces electronic goods on behalf of the foreign company for a consideration. So will this foreign contractor supply these goods to foreign company? Will be known only in this scheme. And such exemptions shall be available up to 3031. It is good, it is long term. One can plan under this scheme and take benefit of this scheme. The second one also on similar lines, but again it will require announcement of complete scheme so that one can plan and see that exemption is available without any doubt. So any income which accrues or arises outside India and is not deemed to accrue or arise in India. Now, if you look at this, such income is not taxable here as such. This exemption is sought to be given to an individual being a non-resident for a period of 5 consecutive tax years immediately preceding the tax year during which he visits India for the first time for rendering services in India in connection with any scheme as may be notified. So a non-resident for 5 preceding years comes to India for the first time, renders services here, then the income will be deemed to accrue. It will actually accrue or arise in India. Scheme will be framed, and then we will know in what manner this exemption they want to give. But again, this exemption is sought to be given for long term, and such individual during the relevant tax year renders any service in India in connection with any scheme which will be notified. There it was capital equipment, tooling. Here, what is the scheme? What kind of income? What kind of service? Nothing is known when the scheme will be announced. We have to read, interpret, and plan accordingly. Such exemptions shall not be available beyond a period of 5 consecutive years. So after the non-resident comes here, the exemption will be available for 5 years and any other conditions that may be prescribed. So this provision will have better quality after this scheme is announced. Coming to next, again, this exemption is allowable to foreign company. Any income accruing or arising in India or deemed to accrue or arise in India by way of procuring data center services from a specified data center. So again, I think holding subsidiary relation will come up. The foreign company will have to be notified by the central government. Foreign company does not own or operate any of the physical infrastructure or any resources of specified data center. So it will not allow these facilities or infra to be owned by an independent person. Perhaps they will set up subsidiaries. Such foreign company maintains and furnishes such information in such form and manner as may be prescribed. That is okay, what information to maintain. And exemption will be available up to 2047, till the time India becomes actually Viksit Bharat. So that is the intention, and that is how exemption will work. But again, let me tell you, in spite of these provisions, in the finance bill. In the absence of scheme, it is not possible to plan. Maybe in another 2-3 months, the scheme will come. Then extending due date to file return of income for certain taxpayers. So those who are having business income and are not subject to audit, at present the due date is 31st July. Now it will be 31st August. And since this comes into effect from 1st March 26, it will be applicable to assessment year 26-27 also. Then again, extending the period for filing revised return. At present, it is allowed to be filed up to 31st December of the assessment year. And in the new act, up to 31st December of the year following the tax year. But now it is proposed to be extended to 31st March. So it was earlier some 21 months, then reduced to 12 months, then reduced to 9 months, now again extended to 12 months from the end of the tax year, previously from the end of the previous year. So this kind of rollbacks are not understandable. 21 to 12, 12 to 9, 9 to 12, 12 to again 9. I don't know how many years they will play with it, but this is what we have to remember. It is subject to an additional fee, which you may note, 1,000 rupees or 5,000 rupees, depending on the income that you declare. Then again, scope for filing updated return in case of reduction of losses. At present, if you see under the old act and new act, updated return can be filed only if you want to declare more income and pay tax. So if there is no additional tax liability, you can't update return. But now, if you have declared, for example, loss of 10 lakhs, and you want to update the return declaring 5 lakhs loss, that is, loss is reduced, but no tax liability. It is possible, you can update the return and do it. There won't be any additional tax payable as there is no original tax on the losses. Then allowing filing of updated return after issuance of notice under reassessment. I will go, how much time? 10 minutes? Yeah. So updated return can be filed even after the issue of notice under the old section 148, now 263. So if you receive a notice for reassessment or notice for assessing income which has escaped assessment, even after that you can update your return, original return, pay the additional taxes. What you can save is the penalty under the old section 270A. New section I have forgotten, it may take some time to remember, but under the new section, parallel section to 270A, that penalty you can avoid and you can update the return. I think again, these are some good steps, and the promise for decriminalization which they gave earlier, I think it is coming in true sense, because even prosecution provisions we'll see later, they are brought to an extent where you don't feel you are treated, in spite of being taxpayer, you are treated as criminal. Particularly, it was told that for TDS defaults, if there is prosecution, I am acting as your agent without any payment or remuneration. And you treat me as criminal just because there was delay or sometimes there was default in deducting. This is not something which is in honor of a citizen of a country. So I think they are coming to lines and now decriminalizing many provisions which existed earlier. Now coming to safe harbor, what they are doing is in IT sector, for IT enabled services, number one, knowledge process outsourcing services, number two, and contract R&D services, there were different safe harbor percentages. Now for all the three activities, they are introducing a common percentage of 15.5%. So you don't have to remember and follow processes differently. Earlier it was 17 to 24% depending on your contract value under each of the category. Now it will be common 15.5%. Although it is reduced, it is still on the lines of ease of doing. The eligibility threshold they are enhancing. That this safe harbor was available if your transaction value did not exceed 300 crore. Now this transaction value is being brought to 2000 crores. So again, a good step. Approval of safe harbor for IT services will now be processed through an automated rule-based mechanism. So similar to low deduction tax certificate, even safe harbor application will be electronically processed. And if it is done in letter and spirit, I think it will look like heaven, that you don't have to go to the income tax department, talk with the tax officer. Of course, there are two-way advantages, disadvantages. Certain aspects which one may not be able to understand electronically, you can personally explain if it is physical. But at the same time, if it is rule-based and liberal, there is no need to explain. Once you satisfy certain basic conditions, safe harbor should be allowed. And one should not twist the conditions so much so that taxpayer is asked to go on explaining, and for obvious reasons. Current margin will continue for new applications. Yeah, sure. So whatever is already allowed, it will continue. New safe harbor data center services providers. For data service providers, it will be 15%. And this is based on speech of finance minister. The rules are yet to come. So like those schemes here, the rules will be framed and they will come. So let us hope if it is automatic, the rules are simpler to comply with. Then APS, again, for IT sector, fast-track unilateral APA process for IT service companies with a target timeline of 2 years for conclusion, extendable by additional 6 months at taxpayers' request. APS take too long a time, and it require modification of income also. So this will be good if it is concluded in 2 years and put on fast track. Modified return framework for APA regime has been streamlined, allowing both the APA signatory and associated enterprise. See, at present, what happens, if I have applied for APA, I have already filed return, but APA is approved after, say, 2 years. I can revise the return, modify the return. But my associated enterprise is also impacted by the APA, because if both the parties are impacted, the AE was not allowed to modify the return. And it was injustice that in my case I modify, the other party suffers because AO will make additions and levy even penalties. So now they are allowing modification of return by even associated enterprise. So both will modify and the income or the transactions will be declared having mirror image, same rates. Then issue of notice under old section 148 and 148A, under new regime 280 and 281. So it is proposed to clarify that for income escaping assessment, the notice initial notice under 148A and then notice of satisfaction that it is a fit case for reopening, both can be issued by the in charge assessing officer. It is not supposed to be issued by National Faceless Assessment Authority. So this was not clarified and courts have given diverse judgments. Some courts held that it should be issued by the jurisdictional AO. Some have held that no, it should be issued by National Faceless Assessment Authority only. So now there is a clarification that this notice be issued by the jurisdictional officer, and once it is determined in the notice that case is fit for reassessment, then the process of assessment will be conducted by faceless authority. So there is complete clarity now, and there will be no disputes going forward. So, yeah. Yeah, this will be retrospective. So for all pending cases, this will apply. And suppose a dispute is pending in the court, it will be guided by this. So
Already concluded orders.
concluded orders, there is no mechanism to reopen them. Actually, they should have done, but if any assessment where it is concluded by National Faceless Authority and the SSC objected, but it was rejected by the court. Assessment is concluded, nothing can be done. But if they are in process, then one can go by the new process.
So the matter is pending before Supreme Court now. The hearing was to be on 17th February.
See,
Now this is actually just a bill now, not an act now. So,
see, if Supreme Court gives judgment in favor of
assessing.
SSC, then also those cases which are completely concluded, they may have to go in appeal and get it done through the tribunal. Because on their own, the officer will not reopen them again.
So it is notice that quashed and whatever by the Supreme Court, issued by the JAO.
I think nothing can be done. According to me, probably nothing can be done. If notice is quashed by the court,
Then
now
what-
Supreme Court says that
Yeah.
no,
JAO should have issued.
yeah,
Then what is the consequence?
then probably it can't be reopened.
So that means all the notices will remain inoperative, all the assessment done also will be null and void.
Yeah. No, assessments done will go by the old law.
No, but sir,
See, if
notices
not-
that was, they have been issued, the proceeding accept, we have.
Proceeding will also be,
That's why whatever orders have been passed based on that JAO notices,
yeah,
they cannot give demand because all the orders will be passed accordingly.
yeah,
So even if the new bill which is now introduced, they said even if all orders will not have impact,
mm,
the only after the bill comes in with the operation, then
Yeah.
it becomes an act. So what is the interim period, what will happen?
interim period, if some notices are issued by faceless,
No issue. The judgment comes in favor of the assessing. The 17th February, those will be hearing. So people design to.
I don't think they can be reopened. If their quest completed proceedings, even on the basis of Supreme Court judgment, they were never reopened in the past.
No, sir, I am on a point where the assessment has been completed, but the judges went to Supreme Court because of the issue of JAO issuing the notice.
Hmm.
And this particular amendment says that whatever the proceedings, it will be deemed to be validity reopened even if the JAO has issued the notice. This is what the provision now states.
Yeah.
But now the matters are pending before Supreme Court. When the Supreme Court comes to a conclusion that notice all issued by JAO are invalid. I'm talking about those cases. Because the matter has been concluded, assessment has been done, there is proceeding to be initiated. But the Supreme Court comes to a conclusion that all these notices that issued by JAO are invalid. So consequently, all the orders passed for reopening also will become invalid. So, yeah.
Send it back to the High Court.
That you answer was saying that not when the airport, just that when you came. And then the department is asking for adjournment.
Yeah.
Say that rather than the maybe become an act, then we finality. It is like gameplay filled by the department.
Yeah, but then by sending to High Court also.
I don't know what the High Court will do.
Suppose High Court also gives the same judgment. So, so as suggested, we'll take it separately. So next is this penalty of 0.5% on turnover and restricted to 1.5 lakhs. Now they are bringing it in the fees category and it will be fixed between 75,000 to 1,50,000 depending on the period of delay which will be prescribed. The same way, furnish accountants, that is transfer pricing report, it will be fixed fee between 50,000 to 1 lakh, and furnish statement of financial, that is SFT. Again, it will be 500 rupees per day or 1,000 rupees per day. So this will be in the form of fees. It will not be in the form of penalties. Again, another step of decriminalization. It will not be treated as penalty. Then rationalization of tax rates. And I think this is very important, that after the demonetization, unexplained cash credits, investments, unexplained money, unexplained expenditure, if they are found by the assessing officer, the rate of tax applicable was 60%, surcharge was 25%, it is 60 and 25%, 4% is the cess, and then 10% additional tax. So total tax liability comes to 84%. 10% on 60, 78 plus 6. So it comes to 84%. This is being brought down to 30% with 25% surcharge, 4% education cess. But the only change is that earlier there was 10%. At present, there is 10% additional tax, whereas here it will be subject to penalty under the provision similar to 270A. So penalty proceedings will be done, and suppose you apply for immunity, then you pay 120% additional tax and get immunity from penalty. So I think position could be better, because otherwise under the old law 84% was tax liability. But there the penalty was not there. Whereas here total amount may go beyond 84%. But again, if you are able to defend penalty, that it is still under reporting or misreporting, then I think now they are introducing a provision that assessing officer will levy penalty subject to the assessing officer not explaining it satisfactorily. So many times additions are made. If you are able to, like under the old 270(11)(c), if the opportunity of being heard is given, whether you can avoid this penalty or not, if you can avoid, the tax liability will be kept at 39%. So that will be an advantage. Then reduction of pre-deposit after additions are made and you go in appeal, minimum 20% is required to be deposited, now only 10%. Relaxation of conditions under the Black Money Act, some reliefs are granted, and you can see in the table. For want of time, I think the provisions which require discussion we have already discussed. All these provisions, if you see, they are only on one or two are important that I will discuss, then I think we'll go to question and answer. Non-allowability of interest as deduction against dividend income and income from mutual fund. Now, if dividend income is taxable, interest borrowed for investing in equity should be allowed as deduction. It was allowed but kept at 20%. Now they are withdrawing completely. In the case of mutual fund, it is not necessary that every time you invest in equity units, if it is a debt fund and you have borrowed money, then it is gross injustice not allowing interest. But they are now proposing that interest on income from dividend and mutual fund will not be allowed at all. So again, this provision needs to be objected, but let us see what is the response. Next is interest on motor vehicle compensation. In fact, courts held that when compensation under the Motor Vehicle Act is challenged in the court, insurance company is not giving, and you have challenged in court, court takes a 5 years time to decide and allows interest for these 5 years, then interest is part of the compensation and it is a capital receipt, it can't be considered to be interest income. So courts have held that this interest income is not income at all, it is part of compensation. The only point that remains is that after the court has allowed and fixed compensation and interest, suppose the insurance company takes further time to pay the compensation and interest for next period is given, then it will be interest income chargeable to tax. But now this section specifically provides interest on motor vehicle compensation is completely exempt. So you need not go by that court decision. Now the provision itself provides that it will be completely exempt. Now, there are more slides. I thought that in 1 hour we cannot discuss all these slides, but I put these slides for information. In easy language, I have summed up. So you may go through, and still if there are questions, even after this session, tomorrow or day after, if you raise and study circle forwards, I don't mind answering questions. So let me thank JB Nagar CP Study Circle, particularly the convener and my friend Sanjeev Maheshwari, for inviting me and giving me the opportunity of sharing views on the direct tax proposals of the finance bill. Like always in the past, it is a pleasure to come here and talk on any topic. Thank you so much for listening.
So friends, I think all of us have enjoyed this very enlightening session. Nihar has taken us through the nuances in a very simplistic manner and explained to us of the exact implications in terms of what the budget provisions hold for us. Government has, I think we can all see that, is making efforts to ensure that there is ease of business and simplicity of taxation, and hopefully all of us stand to benefit, and our clients and the economy as a whole stands to benefit because of that. Sir, there we'll take up some questions, but I think what we'll do is we'll just first conclude the other speakers also, and then maybe we can take all the questions together if you permit me. With your permission, I think I will leverage my friendship with you and request you to stay back. Nihar, thank you very much, and I would request Kailash and Rajkumar Adukia to please come forward and present a memento to Nihar. I would also request NM Jain and Harsh Bajaj to please join in. Friends, as we move towards the second session, the one which post a profession has an impact on our own investments, as well as the advice that we give to our clients in terms of where to invest, what to do, and what not to do, be it in terms of equity market. And every year, these sessions are always looked forward to by our members. And today, again, on the impact of budget on the capital market, we have two eminent speakers who will be dealing with the subject. And we have with us Mr. Ajay Bagga with us. And I would request Kailash to say a few words about him, and also thereafter Vijay Jaiswal to please come forward and be introduced.
Friends, the capital market is often the first to react and the last to reveal its true impact. वो सबने देखा होगा कि जब बजट आ रहा था तो मार्केट कैसा धड़ाम 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 गिर रहा था, कल एकदम से ऊपर हो गया. And understanding these reactions and long-term implications requires not only knowledge of numbers, but also insight, experience, and perspective. We are therefore truly privileged today. It's my honor to warmly welcome our distinguished speaker, Mr. Ajay Bagga, a well-known market expert. सर, आपने न केवल वित्तीय जगत में अपनी दूरदृष्टि से दिशा दी है, बल्कि शब्दों के माध्यम से भी समाज और संस्कृति को समृद्ध किया है. आज जब बजट का प्रभाव पूंजी बाजार की धड़कनों को तय करता है, तब आपका मार्गदर्शन हमारे लिए दीप स्तंभ के समान है. क्योंकि दोस्तों, चोर में भी जो संकेत पहचान ले और बाजार की नब्ज को जो थाम ले, ऐसे मार्गदर्शक का साथ मिल जाए तो हर निवेश सोच समझदार बन जाए. नाउ आई रिक्वेस्ट आवर पास्ट कन्वेनर विजेता जी to